now under a mandate to develop products for the exchanges, right? So minimally, there'll be some products that are developed from outside. So presumably, that means more choice than what we currently have.
But a big, another big lightning rod in the debate was how the exchanges were going to be structured. And it was, will they be state exchanges or federal exchanges? And they ended up being state exchanges, but if you think about if it was a federal exchange, then presumably you would have many more options. And again, it just comes down to how the states choose to implement the exchanges. And if the whole Midwest region, for example, got together and decided to do one large exchange, then you would have more options.
And less cost. And less cost.
Yeah, more options. You're the economist, but more options, more competition, right?
It's the idea.
Right.
But there is this federal, you mentioned that, there's state-run exchanges, but there is going to be this federal option within it.
Right.
That the federal employees currently have. So there is going to be some competition that sort of comes from outside of the region, and I believe that's to try to keep local insurance companies a bit more honest and a little bit more cost competitive. There's supposed to be a non-profit on the exchange. Right?
But we've got nonprofits now.
Yes, we do that. They're not as common around the country, but yes, in Minnesota we do. So there has to be a nonprofit on the exchange.
It's going to be real interesting to see who's in the exchange.
Yeah.
Because different pools, you get large enough pools competing against each other, and the pools, the risk within each pool should look fairly similar. The larger they get, the more they look alike. And so then the difference in pricing for each is more in a major factor in pricing differences is provider negotiations. As long as we still live in this era where there's provider discounts negotiated by respective pools, then the winner goes to the largest pool with the most negotiating club. Right now it's Medicare, and if they don't offer an exchange option, then it's the federal employee plan. And the smaller the pool, the less bargaining power you have when you go to the table. And so the winner I see, we're going to one plan here, whether we thought we are or not. It's going to be the largest pool.
It still has to be based on the utilization within that risk pool too. It's not just negotiations from your providers. It has.
But at some point, everything gravitates towards the norm.
It just becomes homogeneous. Basically.
Yeah. So a small pool could start, and it'd be a relatively healthy pool. They all get together and say, okay, well, we know guess what? Somebody's going to get sick. At some point, you gravitate to the norm, and then your lack of negotiating power puts you at a disadvantage compared to what you were better than at one point. So.
But all of our major carriers have risk pools right now with small groups. Everybody that's on a small group plan, if they're on an individual plan with Medicare or Health Partners, they're in a pool of their own. And they have their bands if they have the protection besides. So, I don't know how it's going to get.
But there's not a whole lot of variation when you look at the